Hello from the Interconnect Mortgage Team. We are a highly knowledgeable group of mortgage professionals who pride ourselves on top-notch communication. We work to provide homeowners with the highest quality of home loans. We are dedicated to educating you on the mortgage process. Please enjoy this video. If you have student loans, you want to watch this video. Recent changes to the calculation of your student loans makes it easier for you to qualify for a mortgage. Today we're going to share updates that are happening on August 16th of 2021 that just may make it the right time for you to buy a home. The Federal Housing Administration, or FHA, is making changes to its student loan calculations that should make it easier for student loan borrowers to obtain mortgage approval. Prior to this change, FHA required a mortgage lender to calculate the monthly payment for deferred student loans at 1% of the outstanding balance on the loan, the monthly payment reported on the borrower's credit report, or the actual documented payment, provided the payment will fully amortize the loan over its term. Today's borrowers have many student loan payment plan alternatives that are offered by the U.S. Department of Education. These plans include variable amortization schedules based upon your income. The restrictions that FHA had in place did not allow mortgage lenders to include these payment alternatives and often kept borrowers from being able to qualify for a mortgage because of the higher debt-to-income calculation. The great news is FHA is adjusting their policy options for calculating the monthly obligation of student loan liabilities. These changes will allow borrowers who previously could not qualify to perhaps now qualify for a mortgage. So let's look at an example. Say you have $100,000 in outstanding student loans and an income of $60,000 per year. You may only have a monthly student loan payment of $245 per month under an approved income-driven repayment plan. Under the old FHA policy, a mortgage lender may assume that you actually have a payment of $1,000 per month due to the FHA's long-standing underwriting rules that apply 1% of the outstanding balance, even though your payment is actually $245. This could prevent you from getting a mortgage, depending on your overall credit profile and other debt obligations. The great news is that the new FHA policy, effective on August 16th of 2021, adds a special student loan section and amends the previous calculation rule. The new FHA policy will allow mortgage lenders to use a borrower's actual monthly student loan payment amount, even if it is below the traditional amount of 1% of the total balance. And if a student loan borrower's calculated payment is zero, which is possible under an income-driven repayment plan, the mortgage lender will automatically apply 0.5%, half of a percent of the outstanding student loan balance as an assumed payment rather than the 1%. That's half of what we had to use before. This new policy will make a big difference for individuals throughout our nation and is another step to promote equity and opportunity for home ownership. If you have student loans and were not able to qualify for a mortgage before, be sure to check with a licensed mortgage lender to find out if you qualify for a home loan under the new rule. Home ownership is the cornerstone of the American dream and the best way to build generational wealth. Thanks for watching. We are here to answer your questions and help you through the process. You can reach us online at www.interconnectmortgage.com. We look forward to working with you.